as we discussed off the top of the show, our central bank, Bank of Canada, had an interest rate policy announcement this morning. They've decided to leave interest rates as they are in that Bank of Canada rate at 5%. We have a chart here which shows how high the Bank of Canada interest rate has gone over the past, well, let's call it 1.5 years. They've raised interest rates many times. And you can see here, September 6th, top of the chart, they didn't raise. The past two meetings, they did raise. And recently, we heard that Premier of British Columbia, Mr. Eby, Premier of Ontario, Premier Ford, sent letters to the Bank of Canada and asking them to please hold off raising interest rates. And, the tone of their letters, in my opinion, was one that was saying that, maybe the Bank of Canada isn't in tune as much with what's going on the ground here in Ontario, over in BC, how much under the gun individuals are with higher rates. And we know that mortgages or mortgage debt, mortgage loans make up a very large amount of the borrowing. It's the largest debt that most people carry, lines of credit or just plain mortgages themselves. And for many people that have variable rate mortgages, we know how much those have gone up. So I think the premiers of Ontario and BC wanted to communicate with the Bank of Canada to have them, think twice about raising interest rates in the future. And to be honest, I don't think that had much of an effect on the Bank of Canada. I think the Bank of Canada was on pause for today's meeting for a while yet. But as we saw this morning, and as we like to say, hawkish, the Bank of Canada had a hawkish pause. Well, what does that mean? Well, you can use the word hawkish, or you can use the word more in terms of a pause that they said we're pausing today, but there's a good chance that we may raise rates in the future if the data warrants. So even though they paused today, many people are fearful that they may raise rates still one more time before the end of the year. And again, I think it's going to depend on the economic data, the data that we see coming in. The Bank of Canada does not have another rate announcement for a little while as yet. So a lot of the data that they do see, data on things such as even things that they don't control, that we don't control, such as higher gasoline prices, for example, will definitely play a factor into whether Bank of Canada raises rates again. And we have another graph here, which talks about the Bank of Canada's overnight interest rate versus the inflation rate. And I've shown this one before, but to me, the most important thing above or about this chart or graph is how much higher the bank rate now is above the inflation rate. Usually when we see that kind of disparity, that kind of difference between the two, that tells me that the interest rate hiking cycle should be and probably is coming to an end soon. And I guess the difference between the two gives the Bank of Canada a little bit of wiggle room should they decide to cut interest rates possibly in 2024. And one thing I did hear this morning from analysts is not so much about how much more they're going to hike rates. We're all talking maybe, this could be it, or maybe one and done. But when will they cut interest rates? And the talk is maybe sometime mid-2024. So Bank of Canada, Federal Reserve, they're going to have an interest rate announcement in a week and a half, 2 weeks' time. The talk is that they will not raise rates either. And I think for the markets, for the stock market, as I've said many times, what the Fed does and what the Fed says seems to be more important for the markets than what our Bank of Canada says. But overall, it just seems like we are getting closer to the end of the interest rate hiking cycle. And whether or not we have one more hike of interest rates in store for us remains to be seen. But I guess the data will tell us everything over the coming weeks.